All right, cool. So when it comes to balanced price range, that's our next topic. It's pretty much understanding which gaps are valid, which gaps have been mitigated, and how to treat other gaps accordingly. Okay, so we got to know what to do with our fair value gaps because that's obviously the basis for our trading. So let's look at this bullish leg right here. We obviously have a gap right here, and we also have another one right here. So a question I tend to get a lot is, how do I know which gap to use? How do I know what gap is going to hold? Blah, 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 and stuff like that, right? Okay, cool. So let's take a look at this, right? So what we learned from imbalances is that price likes to seek out gaps and then take out liquidity. So within this gap right here, our liquidity point would be all the way up here, which does not get taken out till right here. So let's keep that in mind, okay? Then we have this gap and we have this gap. So this gap gets encroached upon. As you can see, we play around a little bit and then eventually deliver. So what BPR practically means, balanced price range, it just means that every gap below a gap that actually does what it's supposed to do is now no longer regarded. So we no longer regard this gap. We're no longer looking for price to trade into it. We're no longer paying attention to this gap. We can go ahead and even delete it from our chart, right? Because this gap has done the job. It has balanced the leg of this trade, right? We're only worried about bullish gaps that exist above it, right? Now, look right here as well. So this could be a little complicated situation. As you can see, this gap is currently doing its job. We can also regard this gap right here because this one ends up balancing price as well, right? So when this happens, we would technically no longer regard this gap, but guess what? This gap already balanced price. So then we already won't be looking at this gap either, okay? So just because it has a check, let's go back. Just because it has a check or it balances out price, that doesn't mean we'll wait for price to come back to it again. No, this is not the catalyst for this move, right? This gap that worked, I know you can't see my quotation hands, but that worked is not the reason for this move as well. This gap has already done its job. We're not worried about this gap anymore. That is essentially what BPR means, right? And it's going to be very, very crucial, especially when it comes to taking our entries, knowing which gap to actually take the entry from and how we're going to deal with the other gaps, right? Because as you can see, fair value gaps exist everywhere. They are everywhere, okay? So we need to know how to trade them and how to use them accordingly. So let's look at some more examples, okay? So we have this bearish leg right here. It's a very good one, okay? So within this bearish leg, we have a lot of fair value gaps, a lot of them. So price is just continuing to distribute downwards aggressively, right? We have all these gaps, all these gaps, all these gaps, and so on and so forth, okay? So how do we read these gaps and how do we actually dictate this? So as we're going down within these orders, right, we can see that we have a gap that eventually balances out price, right? So you see right here, so this gap, we pull back into it and then we take out the liquidity right here, which means this gap does its job, which means every gap above it is no longer valid, right? We're still waiting on these two gaps, but as you can see, these also get mitigated, right? Price close above this one, price closes above this one as well. So we don't have to worry about these two gaps, but this is the BPR situation. Nope, let me go back because that's not it. This is the BPR situation right here, right? This gap balances price within this down leg, so we're no longer worried about these two up here. Now let's look at what happens as well. Look what happens when price revisits those gaps, right? We get ran through. We disrespect these gaps because they're no longer valid, right? And these just already just become invalid just because price is closing above them as well, right? And like I said, we don't pay attention to mitigated gaps. So I wouldn't say these are invalid. These are more like mitigated, but they're still invalid. But just to separate it, we can call this like mitigated. This is also mitigated, but it's with a check, right? Right. So like I said, while talking about mitigated gaps, we're not looking for price to come back up here to then take a trade again, right? As you can see, we revisit this fair value gap, but this is not a reason for us to take another trade. This gap has already done its job by distributing price to these lows right here, okay? So that essentially is BPR in a nutshell. We combine this with liquidity structure, and like I said, especially when we're taking our entries, just to know which gap we are actually taking trades from and how to deal with other gaps, because we are going to be trading with confluences, like I said. So if we're trading with confluences, things are going to stack with certain gaps, and that's also going to help us eliminate what gaps we're looking for. But when that doesn't happen and we have to use BPR, we know what it is. We're able to employ it and we're able to take proper trades. Okay. So next, it's going to be a very important lesson, understanding time to trade, right? It's time and then price, not price and then time, which means all this we're learning is useless if you don't apply it to the right time. And we'll get into that in the next lesson. So let's get right to it.